If you own your own home and you've got equity in it, okay, I don't care how much equity, as long as it's more than 5%, 10%, you need to have a home equity line of credit in place. Not because I want you to use the equity in your house like an ATM machine, but for one enormous reason, you need to have a line of credit in place. I'll tell you why coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. I've got a very meaningful story to tell you right now that is true, and it happened to a friend of mine. And I'm changing some of the details to protect the innocent here, but this is the sort of thing that your certified financial planner gets into. And the message, normally I deliver the action item at the end of the video. I will do that again, but I'm going to tell you right now, the action item is you need to get a home equity line of credit in place. And I'm preaching to the choir here. This is cobbler's kids without shoes. I've known that my wife and I needed to get a line of credit in place just in case something happened, and we haven't done it yet. And mortgage loan officers, they're busy. And with interest rates and whatever, they're probably going to charge $100 or $200 or whatever to even open up the line of credit just so it's available. But you need it. You need it, and I need it too. And the one reason is this. If you don't need it, okay, when you don't need it, it's really easy to get. If you don't need to borrow the money, it's really easy to set up the home equity line of credit, have it available. But when you desperately need it, if you haven't already set it up, it might be impossible to do so. That's why you need a home equity line of credit. All right, so a friend of mine, let's call him Mark, okay? So Mark and his wife, they've got no debt, okay? They paid the mortgage off, and he was working just fine, and she was doing some freelance stuff, so they needed her income, but it was more of a passion project for her. She was just enjoying her work. She wasn't necessarily doing it for the money, although it did bring some money in. They were able to live off of his income. Not only live off of that, but live below that. They've funded up. They saved up about $1 million, and they paid their house off. Their house is worth about $250,000, and paid the mortgage off, and they're in their early 50s. And so they were doing great, right? By any measure. And he was having some sort of health issues, but it really wasn't anything they were worried about. They were just adjusting his diet and trying to manage some of the pain he was dealing with through that. And then he was diagnosed. They found out that he had a unique disease, and with diet alone, it was going to help his symptoms, but it wasn't going to go away completely. Now, enter January of 2020, and this individual, Mark, his symptoms got more severe, and he was unable to perform his job anymore. And it was a mutual decision, but he was in essence told by his employer, you're unable to do the job. This is a hard, spot for us to be in, but we can no longer keep you employed because you can't do what we're paying you to do. And he understood it. And Mark is the kindest guy. I mean, understood it completely, and thanked them for employing him for that long. And so now he was out of work. And the passion project, the fun work that his wife was doing, she was no longer able to do because his condition worsened quickly. And he could live with his condition for years, and that's the plan, for decades, really. But it's just painful for him to walk. He's not stable on his feet, and therefore she needed to stop doing her freelance work so she could take care of him. And really in an instant, and not in an instant overnight, but in an instant, within 2 years, within a year and a half, they went from everything being okay financially to now no income in the family. They're applying for Social Security disability, but that can be a process. That can take, at easiest 6 months, sometimes longer. Even they've heard up to 3-4 years, and that's not an exaggeration. So in order for them to kind of make their lifestyle work, they've got to get on Social Security disability. But thankfully, They had some foreknowledge that he might not be able to work for a long time, so they'd been building up cash. And so in addition to the $1 million or so that they've saved up for retirement, they saved up about $100,000 in cash as well, and they only spend about $1,500 to $2,500 a month. They manage their expenses really well, and because he's in so much pain, they can't travel and do other things, and so they can live off of that for a while, hopefully until the health insurance or until Social Security gets approved. But here's the issue. Because of his condition, they need to make some changes to the house in order for him to stay in the house for as long as possible. And they've looked at their current home, and it's not really ideal for them to make to invest the money to make the adjustments that would be needed to in order for them to live there for a long time. And so what they've seen that's best for them is they should buy and build a house that's suitable for his condition and his health. And while they know this is the more expensive route, they believe long term this will be the best option and will keep him comfortable in the house for as long as they can. So they need to buy and build, and they've worked with they have the lot picked out. They've worked with a home building company. They've got it all specced out, and they're working on the quotes. And yeah, it'll cost them about $100,000 extra when they sell their house and use that money for the new purchase. But that's okay. That's okay. However, they have no income, as I already shared. They can't work. Neither of them can, and they're not on Social Security disability just yet. But they need to build the house now. They can't sell their existing house because there'd be no place for them to live. Well, they could live in an apartment, yeah, but with his health and his condition, that would be very difficult for them to do, if not outright impossible. So they've got to build their house before they sell their old one. Well, they can't build their house if they can't get a loan, and they can't get a loan unless they have income. They are completely in a financial pickle. And I'm working with some different lenders. We're going through some creative strategies to see if we can get a loan against the investments that they have set aside. We might not be able to get the full amount that we need in order to build the house. Obviously, we can just take the money out of their retirement accounts, but doing so, in order to get about $300,000 in cash, we'd need to take out about $400,000 and pay tax about $100,000. I've done all this analysis, and I'm using rough numbers in order for them to get the $300,000 to build their house. And some of you might be thinking, well, they could take the money out of the IRA and do a 60-day rollover, sell their house quickly. Yeah, but they've got to be funding the build along the way, and then will their house even be able to sell that quickly? No, likely the money will be out of the IRA for longer than 60 days. Guys, they're in a real bind. And this isn't a, gosh, if only you would have done this. But so through financial planning, we're working on their options, and we're going to navigate through it. And thankfully, because of their overall situation, their financial life doesn't need to be perfect in order for their plan to work. Okay? But for you, if you haven't had that experience yet, get a home equity line of credit in place now. If they could use the equity in their existing house right now, that could help fund the build of the new house. And you might be thinking, yeah, well, they can just do that. They have no debt. They can't even get approved for a home equity line of credit because they have no income. Something that they never thought would be the case until about 1.5 years ago. So if you have equity in your house, the message, the point is still get a line of credit up and running. When you don't need it, it's so easy to get set up. And it will cost you maybe $200, maybe $300, and then maybe $25 a year or $50 a year to have it in place. But it's so easy, and you might think, I'm never going to need this money. I won't need it. But get it set up when you don't need it. Because when you do need it, you may not be able to get it set up. Okay? So that's the message right there. Work with your certified financial planner. See if setting up the home equity line of credit is appropriate for you. If you also find yourself in a similar situation where you can't access the amount of resources that you need to because all of a sudden your income looks like it's low, work with your certified financial planner. Part of their job is to bring creativity to your financial situation, and they will hopefully be able to help you find some options. So work with your CFP. If you don't have one, you can contact one on my team. Find us online, corehorn.com. That's corehorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.